Today, we're going to build on concepts that we discussed in prior episodes. Lithium ions, automobile disruption, lithium ions, energy disruption, and stacking of Tesla's products to continue growth. How did Tesla shares do today was our prediction dead shot on. This and more in episode 7 of Deadshot Investor.
I don't even know how much I really made. I forgot, it's a lie. Fuck that, never mind what I got. Came up, that's all me for real.
We were right that the market would have a great day today because of the tax breaks that businesses are getting. But the rising tide lifted all ships except for technology stocks. Ouch. So let's take a look at today. We'll take a look at Tesla first of all. We'll see that it broke through the trend line right there again. So once again, we are having to remove the trend line. So at this point, we could just keep drawing a new trend line every day, but it's starting to look more and more horizontal. So this is really becoming a consolidation more than necessarily an upward trend, like an ascending triangle. And the longer that this consolidates, the better. Because consolidation is a psychological springboard. Generally speaking, the longer that this consolidates at a level where it bounces off of $300 each time, $300 becomes kind of in people's minds a psychological barrier. And so people start to lose their fear of it really getting a downward adjustment. I don't want you to lose your fear of that, and I'll explain that later. But it does happen with consolidation, and eventually it'll start to go up, and people will be like, "Oh, here it goes! It's going to take off again," and everybody jumps in, and it goes up very strong, very fast. So it's like a springboard kind of a thing, a diving board at a pool. It has that kind of an effect. So let's talk a little bit today about batteries. And the reason is I want to give proper credit to Tesla. They did something that everybody thought that couldn't be done. This massive 100 megawatt battery, the biggest one in the world. It's 3 times larger than the second biggest battery in the world. So that's just like Tesla, go big or go home. And so let's talk about this battery right here. This battery is what is inside of those. This is a Panasonic NCR 18650B, and it is a protected cell. We'll get into that a little bit, but it is a lithium-ion battery. This is what is in these these giant power packs, wall packs. Model S, the Model 3 is going to have the 2170, which is a little bit longer, a little bit bigger diameter. But anyway, there's 7,000 of these in each car, 7,000 to 8,000 in each car, and just so many of these are being used. So as an investor in Tesla, you have to understand what this is, because Tesla has bet big on this. And so you need to know, is Tesla's bet a good bet? Because have you heard of the Tesla Gigafactory? That's all about this. That's the biggest building in the world to build the smallest little battery right here. So we need to understand it. How does a lithium-ion battery work? You can learn about lithium-ion batteries in a great video called Why Do Lithium-Ion Batteries Die? It's quite boring, so I'm not going to really get into that. But you have the anode and the cathode, and in between you have like a barrier in between that the electrons can go through. And the anode and the cathode are in a solution, and there's like basically this permeable barrier in between of like a plastic basically to keep them separated. But in a car accident, it can get punctured. The anode can touch the cathode, and you get heating, and the battery starts to just superheat. It gets hotter and hotter. And that fluid that's in between those two, the anode and the cathode, begins to boil. And all of a sudden, this little plastic sausage wrapping that's on it will have a blister will form, and then it'll just pop out of the blister. You'll have steam coming out. It'll look like a steam kettle. And the battery will just sit there and start venting. And the anode and the cathode get closer and closer as the solution boils off. And now all of a sudden it's so hot that the plastic fiber in between the two melts and goes away, and the anode connects with the cathode, and you have a metal fire. And an ABC fire extinguisher won't even touch it. It'll actually make it worse. That process takes about 15 minutes. So if someone was injured in the car, there was time to get them out. It's the safest car ever built, so chances are no one will be injured in that car, just whichever car ran into a Tesla. So it's an incredible technology. And as an investor, you must know the future of this technology. What will the costs do in the future? Will it be easily replaced or difficult to replace by a new technology? The inventor of the lithium-ion battery is this super dude right here. He's 94 years old, and he invented the lithium-ion battery. Well, he just invented a solid-state sodium-based battery 3 times as good. So that means that in 10, 15 years, this is in jeopardy of being replaced by something that's 3 times better. But it takes a long time for that technology to become something that can be adopted and be adapted to everyday use. So we know that eventually this will be replaced by something that is better. But in the meantime, what's it going to do? The big oil says that there's a stunning energy cost of the semi-truck. Of course, they're talking about the lithium-ion battery. They're talking about how much energy it's going to take to charge this. They have shown this graph of the battery price of lithium-ion from the year 2010 to the future. And we're about right here right now, which is amazing because just a few years ago we were at 1,000. Let's see my favorite here, Tony Seba. Let's see what he says about this as well.
Yes. From 95 to about 2010, lithium-ion batteries improved by about 14% per year. So dollars per kilowatt hour improved by about 14% per year. By about 2009, something interesting happened. 2 new industries came into lithium-ion, automotive and energy. And when that happened, basically investments went up, demand went up, improvements in technology went up, and from 2010 to 2014, the cost curve actually accelerated to 16% per year. And when we look at the last year and a half, when we get the actual numbers, we may actually see that it's actually accelerating even more than 16%. But even if we take that 16% cost curve, then this is what we do. We extend it out over the next 3, 5, 7, 10, 15 years, and this is what the cost curve of batteries is going to be in the foreseeable future. And that assumes, of course, that it's possible chemically and physically and so on for batteries to keep going at that rate. Now, I'm not saying lithium-ion is going to be the winner in 10 years, but what I'm saying is whoever comes up with another technology is going to have to beat this cost curve.
Okay, so whoever comes out with something better is going to have to beat this cost curve. So as you can see, the cost per kilowatt hour of lithium-ion is coming down at a Moore's Law growth rate on steroids, and it's coming down closer and closer and closer to 0. I mean, it's unbelievable. I mean, just at the beginning of this, 2014, it was over $500. And now here we are just a couple years later. And look at the future of what it's going to do. And we know that this is true. Because of all the investment dollars that are going into this, and because of the past growth rates. By the time the solid-state sodium battery comes online, it's going to be about 2027, right at $50 per kilowatt hour, and that is if there aren't massive advancements in lithium-ion between now and then. But if it's at $50 per kilowatt hour, it will have to beat that to be able to displace the lithium-ion battery for massive adoption. So what does this information mean to you, the Tesla investor? Think about it. The number one most expensive part of an S, an X, a Roadster 2, a Semi for sure, a power pack for sure, a wall pack, etc., is the battery. If we know that the cost for the most expensive part is dropping like a rock, that even today, Tesla is making 20% margin on every car they sell, then we know that either Tesla's margins are going to go skyrocketing, or Tesla can actually lower the cost of their products, which would further spur adoption rates. So think about that. The number one most expensive part of the car is cutting in half every 2 years. That is going to be incredible as that goes forward. But the future of Tesla hinges on the Model 3, and I'll show you why. Here's a great article that talks about the stacking of technologies that we talked about in one of our previous videos. The stacking of technologies is important because you have synergy and you have the new exciting thing, the next thing that's funded by all the base things that are still selling really well for you. And not only that, if you look at this graph in this article, it shows that the Model S has completely plateaued. And it just is the way that it works. Quarter after quarter after quarter after quarter, the Model S has gone up at a beautiful rate, and then it plateaued right in the nick of time. That's right when the X jumped in and took over the heavy lifting and continued the upward trend for Tesla. So that's why the Model 3 is so important to the future of Tesla. And that's why everybody's looking at it like this. They're looking at it and just analyzing every little piece of data that they can get about how many Model 3s are being shipped. People are posting pictures of semis that are pulling truckloads of Model 3s that are off for delivery. And everybody's just doing everything they can to get every little piece of information because it's so important to the future of Tesla. Can you imagine this graph right here with the S on the bottom, the X on top of that, and the 3 on top of that? It's going to just continue its curve. It's going to continue to grow. And that's why I think that Tesla's future is incredibly bright because of these things that we've talked about in each of these videos. The stacking here that we see is just going to be absolutely incredible, and I'm so excited about it. So again, tomorrow we expect consolidation, jello on the plate, unless somebody announces something. But here's our warning. If things are bad with fourth quarter 2017, which is right now, if things are bad with this bottleneck and they can't ramp up their S-curve, according to Earnings Whispers, January 31st is the day of reckoning. And right before that, the delivery numbers will come out. Tesla will release the delivery numbers for the fourth quarter. So in January. So I expect if the delivery numbers are terrible for the Model 3, like they have been in October, November, if they're bad again in December, I expect a 10 to 15% adjustment in the stock price. Now, the good thing is the consensus is $3.75 lost per share. So now all of a sudden we have this big battery that's coming in. Plus, Tesla's taking a bunch of its leases on its solar stuff from the Solar City side. They're bundling them and selling them as bonds with an A- rating. And so they're raising cash and doing some different things like that so that they can write down how much cash they have. In the earnings, when they release their earnings, they'll say, hey, listen, look how much cash we have. They'll have a huge cash infusion from Australia, theoretically, and a huge cash infusion from selling all these contracts that they have. So will they beat $3.75? If they do, it's going to go way up. So it's crazy. You got to love earnings roulette. How are you going to play it? I don't know. It's up to you. But if you work for Panasonic, please fix the bottleneck. And if you don't, or even if you do, please subscribe. Peace out.